Hi guys, this is Xenix 2012. I got another peak oil segment for you. This one features an interview with Matt Simmons and David Kirsh on CNBC. There's a third guy. I didn't get his name, but he barely got in a few words edgewise. You know, I watch CNBC and Bloomberg throughout the day, and whenever I see something that I think is of interest, I hit the record button on the VTR. I was a little slow in this case, so I missed the introduction by the anchor, which is probably just as well because her name is Melissa Francis, and she sounds about as melodious as a screeching parrot. You will hear her, for want of a better word, screech during this interview. And, you know, where does CNBC get these anchors? I mean, Maria Bartiromo and this Melissa Francis, I mean, their voices are just like nails on the chalkboard. I don't know why. I don't know what people see in them, why they're so highly rated. But anyway, that's neither here nor there. This bimbo, Melissa, you know, evidently sees fit to challenge Matt Simmons on whether he still believes in what he wrote in Twilight of the Desert. Matt, do you still believe that Saudi Arabia has peaked? You know, I mean, just asinine questions. You know, I don't even know why I watch these channels. It's really garbage. But hey, why does Don Harold beat up on Kramer every night? You know, it's a blood sport. It's like a train wreck. You just have to look, right? Anyway, I hope this is moderately informative. Hope you like it. Bye.
Do you still think that production, especially in Saudi Arabia, has peaked?
I suspect it has, but I think it'll take probably about 3 more years. Kirsh, for instance, is one of the most technically challenging projects that any company in the world has ever done. They have a 56-inch pipeline bringing 4.5 million barrels a day of Arabian seawater to create an artificial aquifer to try to push the oil out of the ground. It'll probably work, but it is totally unproven how much oil can come out. They're really betting the ranch on technology that's really almost over the top.
David, what do you think about that argument? I mean, they are not ones to overpromise in the past.
No, certainly, and they've taken their time and even promising to get to the 12.5 million barrel per day capacity until they were sure that they could do it. This is one of the reasons why they're reluctant to talk about 15 million barrels per day. But I think the constraint is more capacity in terms of capital, what the service sector can provide, and project management, not geology. If I look at the performance of Saudi Arabia's output over even just the last 18 months, it doesn't suggest to me that the oil sector is in decline. They went from about 9.2 million barrels per day in mid-06 down to 8.5 in July of last year. Now they're producing at 9.7 million barrels per day. You can't swing at that level of magnitude if your oil sector is about ready to go into decline, or if it indeed is already into decline. This has the hallmarks of a very healthy oil sector for me.
Yeah, so David, you're saying Matt's wrong, basically.
On Saudi Arabia, I mean, I think longer term, we do have some convergence of views. I think we're going to start seeing the new oil sources more difficult to reach, increasingly expensive. I think longer term we're looking at an end of oil as a cheap fuel. But I think where we get from here to there is where we differ a little bit. We see over the next couple years actually probably a pretty sloppy oil market with increased surplus capacity coming both from higher capacity in OPEC and non-OPEC, and very slow growth in demand.
Matt, what do you think about that? Because, I mean, when I go to OPEC and go to various summits, they're saying that there is oil on the market that nobody wants to buy, sitting in tankers offshore. I mean, you hear that from people like John Kilduff, all kinds of people that are watching the market. It doesn't seem like production has peaked.
Well, you know, one of the oddities is that we're basically taking at face value a bunch of claims with absolutely no verification at all. It would be, you know, I could tell you basically by 2012 I'm going to be worth $2 or $3 billion, but there's no way that's going to happen.
But what do you mean? The oil's sitting in tankers offshore, ready to come to market. I mean, the oil is out of the ground.
If that was the case, oil prices wouldn't be $140 a barrel. I think we have to be very realistic that we have a bunch of boasts right now about how much oil capacity there is. There is no proof whatsoever that Saudi Arabia is even producing 9.5 million barrels a day, let alone 9.7. It doesn't show up in any of the export statistics of the IEA. So I think it's time to send in auditors and actually get real production data and stop just taking people's confidence that we can get there, because we have a very tight market today.
David, what do you think about that?
Demand is growing too fast.
I think what we're seeing in the market right now is if we take a look at Mars production in the Gulf of Mexico, where we have full accounting, they're seeing too an increased difficulty to place those barrels into the market. The rally up to $147 was not led by any sense of crude oil tightness, but by extreme tightness in distillate markets, particularly in Asia. And even there, we're now seeing an easing of those balances, not only as the U.S. is increasing its distillate output, as Europe and Asia come out of refinery turnarounds, but as India and China are adding 1.3 million barrels per day of new refining capacity by the end of the year. I mean, we've got plenty of crude oil in the market. If you want it, you can go out and buy it.
Right.
We've got plenty of refining capacity over the short term. We need to continue to build some more. And over the next 5 to 7 years, we're going to have plenty of oil capacity too.
Okay.
I think the problem is, does demand continue on a very rapid pace, or do we start making some of those policy moves now that will pay off in 5 or 10 years?
I want to hear what Paul thinks of this argument.
Yeah, I mean,
Who's persuading you?
No, I lean more towards where David stands here, and I think the more interesting question for me right now is at what price, at what point do lower prices actually become more problematic than higher prices, strangely enough, because the problem we all have is trying to make investments going forward in alternative fuel sources. You look at oil prices and you say, wait a minute, if these are coming back to $80 or $90, what does that mean for investments in geothermal? What does it mean for investments in other sort of base energy?
That's a great question. And before we run out of time, Matt, let me ask you, where do you think the price of crude oil is headed? We've seen a big pullback, on a relative basis from that high on July 11th. Do you think that we've seen a near-term high?
I would doubt it, because I think the market's too tight. I think it's interesting, the concept we have so much crude on the market. If you look at the EIA's data that came out 2 days ago, we're still basically at about an all-time low in days supply. Our finished product inventories are extremely low.
Price headed?
And so I think the prices are headed way up. I think oil is still very inexpensive, and the faster we get our head around that, the better off we're all going to be.
Are we going to visit that high that we saw on July 11th before the end of the year, do you think? Are we going to see it before the fall?
I suspect so.
Where's the price going to be Labor Day, Matt?
I don't know, but I think that we should prepare ourselves to not be shocked when we cross $200 a barrel.
Okay.
The market's tight.
Yep. Thanks to all of you for joining us. Matt, you have a beautiful setting there. I know you're in Maine. Thank you for taking time out of your vacation to be with us today. We appreciate it.